Welcome to Blizzard Fire. We hope this video helps fire up your solution.
In this video, I will explain how to make a ledger account. A ledger account is a fundamental tool in accounting, serving as a dedicated record for all transactions related to a specific asset, liability, equity, revenue, or expense item. It provides a clear, organized view of how each account's balance changes over time, showing both increases and decreases. This systematic approach is crucial for accurate financial tracking. To set up a ledger account, simply draw a large T on a page. This creates two distinct columns. The left column is always designated for debit entries, and the right column is for credit entries. Clearly write the name of the account, such as cash or accounts payable, above the T to identify its purpose. This simple structure makes recording straightforward. When recording transactions, remember the basic rules of debit and credit. Debits increase asset and expense accounts, while credits increase liability, equity, and revenue accounts. Conversely, credits decrease assets and expenses, and debits decrease liabilities, equity, and revenue. Every transaction affects at least two accounts, with total debits always equaling total credits to maintain balance. To balance a ledger account, first sum all the amounts on the debit side, and then sum all the amounts on the credit side. The difference between these two totals represents the account's ending balance. If debits exceed credits, it's a debit balance. If credits exceed debits, it's a credit balance. This final balance is then carried forward. Also, for more insights into managing your finances, check the description for a book that can truly change how you think about money, as well as other deals.
Thanks for watching. If you found this helpful, don't forget to like and subscribe.